Look at this toast. In 2026, the economy looks golden and crisp, but scrape the surface, it's carbonized regret. Everyone is partying like it's 1999, but the hangover is already in the mail. We're walking into a liquidity trap so beautiful, even the smart money is falling for it. While you're celebrating on the deck of the Titanic, I found the exact evidence that the 2026 market is a hall of mirrors. You aren't investing, you're the mark at the poker table. Stick around, because I'm showing you the trapdoor no one else sees. Quick pause, I am just a guy on the internet with a laptop and a suspiciously deep interest in market crashes. I am not your financial advisor, I don't know your life. If you bet your kid's college fund because of a video you saw while on the toilet, that's on you. Use your brain. Okay, let's go. Look at this, a nice cozy trip down memory lane. This is like looking at a photo of your ex right before they cheated on you. This clue tells us that history has a very specific rhythm. For a complete beginner, subprime is just a fancy way of saying lending a Ferrari to a guy who lives in a cardboard box. Back then, banks were handing out mortgages like they were free samples at Costco. The analogy here is the borrowed lawnmower. Imagine you lend your expensive lawnmower to your neighbor, Dave. Dave doesn't have a lawn, so he lends it to his cousin who uses it to cut hair. Eventually, the lawnmower breaks because it wasn't meant to cut hair, and suddenly everyone is wondering why they don't have a lawnmower anymore. That's the 2000s crisis. We're seeing those same hair-cutting financial products popping up again in 2026, just with different names. When you see articles like this resurfacing, it's the market's way of clearing its throat before it starts screaming. It's a reminder that when debt becomes too easy to get, the repayment becomes impossible to hide. We think we're smarter now, but we're just using higher resolution screens to make the same mistakes. If you aren't paying attention to the ghost of 2008, you're doomed to become a ghost yourself in the next crash. It's the first sign that the foundation is made of sand. Now we're getting into the mystery meat section of the financial supermarket. Synthetic CDOs sounds like a science experiment gone wrong, and that's exactly what it is. For a beginner, think of this as a bet on a bet. It's like going to a horse race, seeing a guy bet $100 on a horse, and then you find 10 other people to bet on whether that first guy will win his bet. You haven't even seen the horse. This is the mystery meat hot dog of finance. You don't know what's inside it. The guy selling it to you doesn't know what's inside it, but it's cheap and it tastes okay until the E. coli kicks in. This clue tells us that the complexity of the market has reached a fraudulent level again. When the products become so complicated that even the people selling them can't explain them without using a whiteboard and a shot of tequila, you know you're in trouble. Securities fraud isn't just for movies. It's the grease that keeps the trap moving. This image is a giant red flag that the transparency we were promised after the last crash was just a coat of cheap paint. If you're investing in things you can't explain to a 5-year-old, you're basically eating that mystery meat hot dog and hoping for the best. Hint, the best rarely involves your stomach staying in one piece. Ah, the siren song of the digital gold. This clue is the ultimate hype meter. It's a prediction market asking when Bitcoin will hit $150,000. For a beginner, this is basically a high-stakes version of guess how many jelly beans are in the jar, except if you guess wrong, you lose your house. The analogy here is the second date illusion. Imagine you go on a first date with a supermodel. It goes great. Now, you're already planning the wedding, naming the kids, and buying a tuxedo for the second date. But wait, did the supermodel even say yes to a second date? No. You're just looking at a chart of possible futures and assuming the best one is a certainty. This prediction market shows that people are desperate for a moonshot. They aren't looking at utility. They're looking at a price tag. When everyone is asking, when moon? Nobody is asking, why moon? This is the peak of speculative fever. It's the hope that keeps the trap open. If the majority of people are betting on a $150K price tag by May 2026, it usually means the smart money is already quietly exiting out the back door while you're busy buying more wedding cake. Bitcoin might be the future, but these prediction markets are just a fever dream. When the when becomes more important than the what, the if is usually a disaster. Welcome to the mom and dad are fighting portion of the evening. This Reuters headline about the Fed minutes from late 2025 is a massive clue that the people steering the ship don't even have a map. For a beginner, The Federal Reserve, the Fed, is like the guy in the basement of a skyscraper who controls the thermostat. If he turns it too high, the building catches fire. If he turns it too low, everyone freezes. Right now, the policy divisions tell us the thermostat is broken, and the technicians are arguing over whether to use a hammer or a screwdriver to fix it. This is the broken thermostat analogy. Imagine you're at a party and half the people are sweating while the other half are putting on parkas. The host, the Fed, is standing in the corner saying, "Everything is fine, we just need to find the right balance." Meanwhile, the pipes are starting to burst. These divisions mean there is no clear plan for 2026. When the central bank is divided, the market becomes a giant guessing game. Uncertainty is the fuel for volatility. This clue proves that the safety net we all assume is actually full of holes and currently being debated by people who can't agree on what day it is. If the pilots are fighting over the controls, it's probably a good time to check where your parachute is located. Why is everyone suddenly reading about 2008 again in late 2025? It's because the horror movie sequel is about to start. This clue is like seeing a how to survive a shark attack manual on everyone's nightstand right before you go to the beach. For a beginner, the 2008 crisis was when the world's banking system almost turned into a giant pile of ash. The fact that this article was updated November 25th, 2025 means people are looking for answers to questions they hoped they'd never have to ask again. The analogy here is the recurring nightmare. You know that dream where you're back in high school and you forgot to study for the final exam? That's the market right now. We're all waking up in a cold sweat, realizing we've spent the last decade ignoring the lessons of the past. Why is this a clue? Because updated means new parallels have been found. The explanation isn't just historical anymore. It's a guidebook for what's happening right now. If people are rushing to Investopedia to understand liquidity crunches and toxic assets, it's because they're starting to smell smoke in their own portfolios. It's the sound of the world's investors nervously Googling how to build an ark, while the first raindrops are hitting the window. We aren't studying history for fun, we're studying it because we're terrified it's about to become our reality again. Remember that 150K Bitcoin dream from earlier? Look at this graph. This is the reality check, hitting the fan. The lines are trending down. This clue tells us that the collective confidence is starting to leak out like air from a balloon that's been floating around for a week. For a beginner, this graph shows the probability of a price hit. When the line goes down, it means the people putting real money on the line are starting to say, yeah, maybe not. This is the slow leak balloon. You don't hear a pop, you just realize that the balloon is now dragging on the floor and looking a bit sad. The hype is evaporating. This is the most dangerous part of the trap because it's quiet. It's not a crash yet, it's a revaluation of expectations. People who bought at the top are now looking at this graph and feeling a tiny knot in their stomachs. This clue is the evidence that the momentum is gone. In the world of finance, if you aren't moving forward, you're usually about to fall backward. The fact that the odds are dropping despite the constant bullish talk on Twitter shows a massive disconnect between what people say and what they actually do with their cash. This is the sound of the exit door being unlatched. It's the market's way of saying, the party's over, please start looking for your shoes. Enter the oracle. When things get crazy, everyone looks at the guy who has been eating the same McDonald's breakfast and buying the same stocks since the dawn of time. This clue highlights the back to basics movement. For a beginner, Buffett's strategy is simple. Don't be an idiot. He says only buy what you understand and hold it forever. The analogy here is the boring burger. While everyone else is trying to invent digital deconstructed nitrogen-infused kale wraps, Buffett is just sitting there with a plain cheeseburger. Why? Because people will always want cheeseburgers. This clue is popping up now because the fancy investments are starting to fail. When the MSN headlines start reminding you to invest like Buffett, it's a sign that the get-rich-quick era is dying. It's the market's way of saying, hey, remember that boring stuff that actually works? You might want to try that before you lose everything. This is the ultimate contrarian signal. When everyone is forced to listen to the boring guy, it means the exciting guys have all gone bankrupt. It's a clue that the 2026 trap only catches the people who are too smart for their own good. If you can't explain your investment to a golden retriever, Buffett wouldn't touch it, and in 2026, neither should you. It's a call to return to reality before reality returns to you. This is the flash warning. This headline about the 2020 crash is a reminder that the market doesn't just go down, it sometimes teleports to the bottom. For a beginner, a 30% sell-off means that for every $100 you had, $30 vanished into thin air in the time it takes to watch a movie. The analogy here is the broken elevator. You're on the 50th floor, you press the button for the lobby, and instead of a smooth ride, the cable snaps. You aren't descending, you're experiencing a gravity experiment. This clue is appearing in 2025, 2026 because the speed of the next crash will likely be even faster. With AI trading and instant apps, everyone can panic at the exact same millisecond. This headline is a clue that the next time the market decides to sell, it won't give you a week to think about it. It will happen while you're making a sandwich. It's a warning about liquidity, the ability to get your money out before the door locks. If the 2020 sell-off exceeded the pace of the Great Depression, the 2026 sell-off could be the first supersonic crash. This image is the market telling you to make sure your seatbelt is actually fastened and not just tucked into the seat. Speed kills, and in the 2026 market, it might kill your entire portfolio before you can even log into your account. The final boss, the dot-com crash of 2000. This image shows the NASDAQ, the home of tech, dropping 78%. For a beginner, 78% is not a dip. It's an extinction event. It's like owning a 100-acre farm and waking up to find only 22 acres left, and the rest is a lake of lava. The analogy here is the pet rock. In the late 90s, everyone was buying pet rock companies, dot-coms, for millions because they had a dot-com in their name. Then, one day, everyone realized it was just a rock. This clue is the complete picture. It links the 2000s, the 2008s, and the 2026 together. We are currently in the AI version of the dot-com bubble. Everyone is throwing money at anything that says AI, even if it's just a spreadsheet with a fancy font. This image is the ghost of Christmas future. It shows exactly what happens when the explosive valuations finally meet the explosive reality. A 78% decline is the catastrophic collapse that clears the slate. If you're heavily tilted into overpriced tech in 2026, this is your map. It's a reminder that what goes up like a rocket usually comes down like a piano dropped from a skyscraper. This is the final piece of evidence. The bubble is full, the needle is close, and history is just waiting for the pop. So, what's the big picture? The evidence is clear. We are living in a giant, flashing, neon-lit trap. We've got the mystery meat of fake financial products, the mom and dad drama at the Fed, and the second-date delusions of the crypto markets. It's a perfect storm of history repeating itself while we all pretend we're too modern to fail. The trap of 2026 is thinking that the music will never stop. But as we've seen, the music is already getting scratchy. So what do you do next? Step 1, stop chasing the moonshots and start checking your foundation. Look at your portfolio and ask, if this dropped 50% tomorrow, would I still be able to pay my rent? If the answer is no, you are over-leveraged and walking on thin ice. Step 2, channel your inner Warren Buffett. Focus on value, understanding, and boring assets that actually produce something. Step 3, keep your liquidity high. In a broken elevator market, the person with cash is the only one who can buy the building when it hits the ground. Don't be the guy holding the pet rock when the NASDAQ decides to take a 78% dive. The trap is set, the bait looks delicious, but you now have the clues to walk around it. Stay skeptical, stay liquid, and for the love of all that is holy, stop listening to the everything is fine crowd. The big picture is simple. History is rhyming. The synthetic CDOs are back in different clothes. The Fed is losing control, and the moon boys are ignoring the falling odds. Stop chasing the 100x gains and start protecting the capital you already have. Build a war chest. Because when that elevator cable snaps, you want to be the guy standing on the ground floor watching the crash, not the one inside the box. If this video helped you see the trap before it snapped, do me a favor. Hit that like button so the YouTube algorithm knows we're actually awake. Share this with that one friend who is currently all in on an AI-powered dog coin. You might just save their life. Drop a comment below.